Good morning, traders. It's Tuesday, the 7th of February. My name is Mark Owen, and this is Phoenix Blue Morning Update. First things first, I'd like to apologize for the lack of sound last week on my morning update. Now, let's have a look at what news announcements came in throughout the evening and early hours of this morning. So, inflation expectations quarter on quarter from New Zealand came in slightly better than forecast at 1.9%. But the main news overnight, or early hours of this morning, I should say, was coming from Australia, the cash rate. Now, it was largely expected across the market that they were going to keep rates the same. They did do that. However, in the rate statement, what they have said is that economic growth and inflation is above forecast. So on Friday, they're due to release their forecast for the year ahead, and somewhere along the line, their forecast for inflation was going to be around 1.8%, but we're over 2% right now, they believe. So they're running ahead of steam, which obviously is saying that their economy is in good hands. Now, later on today, we've got the trade balance coming in at 2:30 p.m. from Canada. That's largely expected to come in around 1.2 billion, which is a trade surplus. Now, the major news in terms of what's been released across Bloomberg this morning is coming regarding sterling and Theresa May, and also regarding the euro. So May repels early attempts by lawmakers to amend Brexit bill. So the Remain camp, who won in the High Court and basically asked that all bills get sent to Parliament to be voted upon. She's basically overcome the first two amendments. So what that's suggesting is that of the 329 seats that she has within Parliament, most of her camp have remained loyal, which is a positive sign for the Brexiteers, not such a good sign for the Remain camp. However, there is calls from Wales and Scotland that they want to try and make more bills come in place because they're not happy about Article 50 being invoked without them having so much influence. So Theresa May has made it quite clear that she wants to invoke Article 50 by the end of March. So we can see, or should expect, some pretty volatile swings, I would expect, in sterling, but more than likely to the downside. So we'll be looking at selling pound across most pairs. And if Australia's news is so good, then that pound Aussie trade that we've called last week and that we've got in the watch list should make for an interesting trade. Then we've also got Draghi says that the euro is irreversible as Le Pen urges French exit. So Marine Le Pen has stated that if she gets elected in France, she will look to replicate what's happened here in Britain. She will look to take France out of the euro. Now he's basically saying that for the likes of Italy and France, those that have huge debts to the central bank, that they're not going to be able to leave. And if they do want to leave, that all debts will have to be paid back to the central bank prior to that in full, which basically he's saying is impossible. Okay, all right. So I think it's time we start having a look at some of the charts right now. Dollar index, as we can see, came nicely off the 61.8, which the 61.8 is a fib retracement of the entire range of the DX, up from 103s right down to the 92s. So we've seen it reject then 61.8, but ultimately when this screenshot was just taken, you can see that it's trying to breach that downward channel on the daily. Now, if we look at the channel, what we can clearly see is it's still producing lower lows, lower highs. So in the grand picture, this is a downtrend on the daily, just looking at cyclical patterns. So I'd be waiting. If you want to try and buy this, then what I'd say is either wait for a change of cyclicity because this is still in a downtrend, or look for another retest of structure before you're looking to get long. You know, it could quite easily come straight off this trend line, break down, and come down to this lower trend line here. Now, the reason we've seen a bullish move in the DX is because we've seen a sell-off in euro. And the euro, if we look at the euro here, it came right into our market cap, and this is one of the orders that we actually cancelled last week due to news announcements, which, hey, we have to stick to our rules. You can see the zone that we had marked in. This has been here for numerous weeks now. We've been looking between the 108.20, 108.50 as a sell zone. But due to news announcements and political plays, we actually cancelled our market caps last week after the Swissy triggered, and we've been waiting to see what happens. Now, we saw here that it broke out of the rising wedge, only to come straight back in. So, question is, what's going to happen this time? It looks like we've made a clear break outside of the wedge now. So we can potentially look at either the weekly pivot, or we'll look at trying to sell the first lower high on this sell-off. Don't rush into this market. There will be opportunities to get in. Let the markets do what they do best, which is cycle. So wait, be patient, confirm change of trend. So dollar yen, this has been a very, very nice opportunity for us. We could see downward pressure. Look at the downward pressure here. Look at the cycle highs, lower highs. It did form a flat bottom through here. So you can see the flat bottom that was formed, multiple touches. And back here, I made note that lower highs, pressure to the downside, expect to see it push through, which we've seen. It leaves a trading opportunity though. So the trading opportunity will be to trade from this zone here, which is anywhere between sort of 1250 to 1275. Look for your price action trade and take it down to what was a market cap down at 111.20 area. That will be a key area, because if we break through that, then the safe haven buying really will start, and we'll see dollar yen. It could drop to 106, but if that area holds, then we could quite easily see it bounce from 111s back up to 115s. Okay, so sterling or cable, also known as, what we're looking at here is a key area around that 124.20 area. You can see it's shaded in grey. This is the 4-hourly chart. And if we look here, you've got resistance, resistance becomes support, and this image was only taken just a couple of minutes ago, and we can see that the sell-off in sterling continues. Now, the one thing that I do know about sterling is it very rarely comes back and retests. It's one of those markets that generally just goes. So this zone, if we break here, then what I'd be looking at is an opportunity taking us down to the 120s. So there's a good 400 pips on reward there. That's trading against the US dollar. But ultimately, you could look at trading against markets that are potentially stronger than the US dollar. So look at the correlations. Look to see which markets are going up against the US dollar. So potentially the Aussie dollar, potentially the yen, or potentially the Kiwi. Those three markets are the strongest out there in terms of currency right now. So pound yen short, pound Aussie short, and pound Kiwi make logical sense. Just find a technical entry. Okay, so then next we're going to look at gold. So here's an intraday chart. So if gold is going to fall, then we would expect to see the US dollar rise. So we're looking to get long gold roughly about 12.23 with targets of 12.50. 12.50 is a significant level on the gold chart. So be diligent. I mean, look, it's a very simple trade this. We're anticipating that we're going to see a little pullback, a little retracement into previous structure highs, previous support. We'll look for a price action and we'll trade it long. There's a $26 reward on offer. So depending what type of candle you're going to get, let's say you've got a $4 or $5 candle, it's still a 4-5 to 1 trade. Worst case scenario, by the time you've added a little bit of spread on. Okay, so that's a really good risk reward opportunity available for you. Now, we do have one other soft commodity to look at, and this is cocoa. Now, I don't want you to just buy it now because it's at weekly support, and you can see we've got two very, very good levels of weekly support. Now, if we go back to 2011, that's this sharp decline over here. We're seeing something similar at this point here, and if we look at the commitment of traders report, you'll find that in terms of the positioning size from the commercials, we've got something very similar. So what this means is what actually happened, what created this move here, and what actually created the turn. Well, during this move in 2011, what you'll see is that although the commercials were buying cocoa very aggressively as price was getting cheaper, because think about the commercials are the users and producers, so they were buying more of it the cheaper it gets. It makes more economical sense. However, at the same point, they were also selling a lot of it, meaning that they thought potentially it's still got further to go. They were hedging their bets in accordance. So if we then look at the statistics and the position sizing as this is happening, it's pretty much identical to what happened here. The short contracts from the commercials are still extremely high. So even though they're buying a lot right now, they're also selling a lot. So expect to see this market potentially fall even further down here until we see some reduction in the short contracts from the commercials. Okay, so that's cocoa, one to watch. Could potentially be a fantastic trade over the coming months. But also on the flip side, if these lows get taken out, this market's going to fall. Okay, so next free trading event, Thursday, 16th of February. There's limited spaces. Most seats are taken right now. If you're new to trading, you're experienced traders, and it's an industry you're intrigued about and you'd like to know a little bit more about it, then we'd love to hear from you. Please register for the event. It is in London. It starts at 2 p.m. Thursday, the 16th of February. In order to register for it, drop us an email at info@phoenixblue.co.uk. And we'll be replying to you as soon as possible with confirmation of your seat, providing we've got some left. If not, wait for the next event or contact us and we'll create a consultation session for you in the office. Okay, traders, have a fantastic day. There's some good opportunities out there right now, predominantly across the cross pairs and maybe a couple of commodities. Okay, all the best. Have a good day, and we'll see you bright and early tomorrow. Bye-bye.